believe we are online. Good afternoon, everyone, and welcome to the second installment of the Germany-Africa Business Forum webinar series in cooperation with AOP Webinars. The Germany-Africa Business Forum, as a quick intro, is a private association that promotes socio-economic relations between Germany and Africa. My name is Sebastian Wagner. I'm the chairperson of the GABF. And I'm truly honored today to hand over to Eleni Giokos, who is CNN Africa correspondent and who, I'm very convinced, will give us a fantastic insight into German-African relations over the next hour or so. Eleni?
Thank you very much, Sebastian. Really delighted to be with you today. My name is Eleni Giokos. I'm a correspondent at CNN. I'm based in Johannesburg, and what a great time to have this conversation. Our topic is investment and trade for Africa's economic development and the role that Germany can play going forward. As Sebastian says, this is in collaboration with the Germany-Africa Business Forum, the Africa Energy Chamber, as well as Africa Oil and Power, and it's been spearheaded by His Excellency Günther Nucke. He is the Africa envoy to German Chancellor Angela Merkel. Mr. Nucke, it's great to have you with us. Such an honor that you're joining us today, and I'm really looking forward to your insights. In addition, our distinguished speakers include NJ Ayuk, Executive Chairman of the Africa Energy Chamber, as well as Renee Awambeng, the Vice President at African Export-Import Bank, or Afrixim Bank, as we call it here. And it's such an exciting time because we're in the middle of an unprecedented crisis, but we also similarly have so many opportunities to look forward to. And we've seen the crisis accentuating existing good and bad trends. And the question is, how do we capitalize on the good opportunities and, of course, to try and create economic growth on the ground? This is the second webinar series highlighting German-African relations, a relationship that has been growing extensively through the years. And you'll remember that in 2017, the Compact with Africa was a Germany-led effort. We saw a major headway being made in terms of the narrative coming through from Germany, one from aid, moving into partnerships, looking at investment, looking at projects, looking at various sectors that include energy, technology, that focus on climate change, and how to truly catapult this relationship into a new era. So we know that Sub-Saharan Africa is expected to clock in the lowest growth in 25 years. This is a reality that is facing many countries and continents around the world, but at the same time, it's an opportunity for change. It's an opportunity to become a lot more agile. So today we're going to be asking questions about Germany's role in the post-COVID era on the continent, how it can assist in talking about and of course, implementing the stories and the opportunities of economic prosperity across Africa. How can the German expertise catapult us, specifically within the energy sector, into what we want, a greener future, but at the same time, ensure that we capitalize on our existing commodities and fossil fuels? What are the financing needs on the continent, and what are the exciting projects within the energy space that will be vital for economic development? So, on that note, as a short introduction from me, I want you to engage with us. You have an opportunity to ask questions to our panelists. We want to hear your thoughts and ideas, and at the bottom of your Zoom page, you'll find a chat option as well as a question option. So please utilize that as the conversation evolves. So on that note, I'd like to now hand over to His Excellency Günther Nucke, Africa Envoy to German Chancellor Angela Merkel. So.
Yes, thank you very much. Thank you for this kind introduction, and thank you for for your interest in this kind of webinar. And ladies and gentlemen, let me start with a general remark. Europe and Africa are more than just neighboring continents. They share a common history, and their future, or maybe fates, are linked. The German Chancellor said when opening the Peace and Security Building in Addis, a present from Germany for the African Union. The quote is, "The well-being of Africa is in Germany's and Europe's interest." Personally, I like to think of the two continents as companions. Weggefährten in Germany, for those who understand German, a person with whom one spends a lot of time or with whom one travels. One cannot always choose one's companions. Some companions from a strong network, climbing high summits, achieving together great views. In other cases, they complement each other like the blind carrying the lame in a well-known fable, who points way out of danger. Such companions usually support each other, but sometimes they annoy each other, and sometimes they go down the wrong path. They have to turn around. But that, or with time spent together, the companions can learn to understand each other and to trust each other. That's the picture I want to draw. For Europe's and Africa's common voyage, I see different scenarios. In a negative one, Africa remains a continent with a high incidence of poverty, many crises, conflicts, disasters with poor people, corrupt governance, sometimes no governance at all. In this scenario, the young, better educated and proactive people are likely to leave their homes and countries and even their continent. Because they cannot find adequate jobs, many will turn to Europe, but as we have to see today in Greece and during the negotiations in Brussels and European countries, do not accept such migrants, labor migrants, not refugees. And which they term illegal. Chains from, or schemes from legal migration into the European Union, which are acceptable for some countries, are not a solution for the scale of potential migrants, labor migrants in this negative scenario. Only strengthening borders, perfecting the fortress Europe to keep out those seeking a better life will not only be difficult, but also, from my point of view, morally questionable. Therefore, it is imperative to bring about a third scenario. One is one in which the companions not only survive, but lead lives in prosperity and dignity. This means that people in Africa have real opportunities and prospects for themselves and their families on the continent, on the African continent. Only if we think right, we can also act right. I learned from a philosopher, Georg Picht in Germany, whoever denies certain aspects of the reality to reassure himself will go astray and is a poor leader in times of need. What would acting right look like? How do we create opportunities and well-paying jobs in Africa? A wait and see policy is not an option. Time is ticking. Also, the old concept of development cooperation were and are only moderately successful, where we, moderately or less successful. Our minister has therefore changed the course with the Marshall Plan. The Chancellor started during the last European Union and African Union Summit in Abidjan in November 2017. She stated, we have to move from development cooperation to economic development. This is not possible without the private sector. So that's the reason why I'm very like to be here with people from the private sector. We don't need to reinvent the wheel in and for Africa. For me, it's a matter of industrialization. That is my term. I'm using this. This is not just my view. It's widely shared in Africa, China and elsewhere. But it is not just industrialization, it's industrialization 1.0, 2.0, 3.0, 4.0 even, all in one. We have to recall that large parts of Africa are still characterized by subsistence, agricultural business. 80–90% of the so-called private sector are informal. These includes 60–70% subsistence farmers and the service sector, for instance, small traders in the streets. Therefore, we have to be careful exporting concepts from Germany with its almost exclusively formal economy with a strong Mittelstand. In my view, basing our concepts on the reality on the ground in Africa is a good start. What does it take for the economy to grow? I have learned from economists that the 4 key factors are the investment climate, good governance, and a stable institutional and legal framework. That is and maybe remains a little bit difficult in Africa. Infrastructure, a well-trained labor force, and access to attractive markets. Starting with a framework condition, we have invested much to strengthen institutions in partner countries, but not always achieved the desired changes in the behavior of the recipients of training and capacity building. Those changes are slow to emerge and depend also on the culture interest of people. Africa includes 54 or 55 countries, most of them with a variety of languages and ethnicities. This is in itself a challenge for any government. Looking from Europe to Africa, I think it is important to have a certain humility in light of the challenges of African leaders and governments. And there will be not one magic bullet. We need flexibility, a range of approaches. Let me now say something about the second key condition for economic prosperity, infrastructure. Africa has very little infrastructure, in particular transport infrastructure. This has been recognized, and Africans have set up a program for infrastructure development for Africa, the so-called PIDA list, to address this issue. Insufficient infrastructure means less productivity. The Egyptian president has mentioned this in every meeting with the German chancellor. We need an elementary infrastructure for African people. But the lack of transport infrastructure also opens opportunities for leapfrogging. DHL, the German carrier, is cooperating in several countries to use drones for delivery. The most modern technologies are tried and tested in Africa. Another challenge is availability of a well-trained labor force. Education and training are priorities for most African countries. Germany listens to their partners, and the Minister Müller, my boss here in the Federal Ministry of Economic Cooperation and Development, has advised the ministry to spend at least 25% of its operational budget on education and training, especially in the field of vocational training, where the German so-called duale Ausbildung is a world champion. And this is key for successful industrialization, including the agricultural sector. But we have to make sure that the creation of jobs keeps pace with our efforts in education and training. Otherwise, we risk that well-trained young people do not find adequate jobs at home, and they are all and more compelled to migrate. I come now to the access to attractive markets. the fourth condition learned economists list for successful economic development. This is a field where African countries and the African Union have decisively taken the lead by driving forward the integration of the small and separated African markets into the African Continental Free Trade Agreement. In 2012, the African Union announced its plans to establish an AFCFTA. In 2019, the AFCFTA was launched. This has exceeded the expectation of even Africa experts, and certainly the European Union, which was still holding on to the outdated concept of economic partnership agreements separated in different regions in Africa. By now, all but one country have signed the AFCFTA agreement, and in 30 countries, the agreement has been ratified. So it's already in power. We all know that in trade agreements, the devil is in the detail. So it will still take a lot of negotiations until the free trade area and later a common market with a customs union will have been established. Still, there is a lot of dynamic and political will with hopes and expectations. And for business investors, expectations are essential. And a market of today 1.3 billion, in 30 years, maybe more than 2 billion people or consumers, is more than an expectation. It's a promise. It is important that this large market will be served by African firms so far. The range of products with value added in Africa is limited in the time being, with the expectation of South Africa, with the exception of South Africa. But a large market without borders for goods and services and the better infrastructure can provide an incentive for investing in increased production in Africa for Africa. Investors from Europe and China and of course from Africa itself. Productivity has to increase, but there's progress, not least because of the efforts of development partners. Not all has been in vain. My position, and with the influence of visibility I have, I'm doing what I can to bring about the positive scenario. Of course, I would like to see many more European and of course German companies investing in Africa, partnering with the African private sector to create good jobs and to transfer top-notch technologies. From my conversations with investors and business people, I know that security of investments and predictability of conditions are key investment conditions, especially for the Mittelstand, which will not start operations in dozens of countries in Africa at the same time, thereby diversifying risk, but start with one or two. And this is where the German government and the European Union have to come in to provide the necessary political flanking and investment guarantees. I would like to share with you a particular idea to stimulate European investments to Africa, not just from the big EU member states, but also from the smaller ones. What if we allow the use of the European structural funds and investment funds also for investing by European companies in Africa? In particular, projects for clean energy and others under the Green Deal could fall into this category. The economic problems caused by COVID-19 and the measures taken into account, to contain the spread, we will considerable, and the first reflex will be for member states to keep the funds on their continent. But in my view, thinking about innovative approaches should be part of what we do in conversations between the governments in Europe and the private sector. It's also an interesting idea to use such funds also for European companies investing in Africa. I mentioned earlier that time is of essence. The pressure is increasing to bring about the positive scenario I mentioned, with conflicts in the Sahel region worsening rather than improving, with South Africa heading for a deep economic crisis and the effects of COVID-19 looming for 2021. So what keeps me optimistic? I would like to mention only 3 short points or trends that, in my view, will contribute to a turnaround. Digitalization is one. Young people in Africa are now different, not different to the rest of the world with respect to their affinity to technology. And the computer is cheaper than equipment for industrial production. So here are many chances and business opportunities which can be applied relatively. Draw your attention to a project using a digital platform that we have developed jointly with the African diaspora in Germany. It's called Bidu.Africa, and what it does is using the knowledge of the diaspora to identify good small-scale investments in the range of 1,000 to 2,500 euro projects in the informal sector. These projects are then co-financed by the diaspora, 25%, and entrepreneur in Africa, 25%, and us, the ministry, by 50%. I said earlier that 80% of the jobs in Africa are informal. This is what we do to expand those jobs using the opportunities in the digital age. A second reason for optimism is Ms. von der Leyen's statement at the beginning of her term that she wanted a geopolitical commission. I thought this meant a more decisive European external policy. And I am still convinced that many member states are in favor of making the European voice heard louder in the international stage, and in particular also in Africa, where we see increasing influence by large powers, China, Russia, US, Turkey, India. Still, the Corona crisis and the recent Council of Foreign Ministers clearly showed that the common European foreign policy, let alone geopolicy, is still a ways away. In Germany, we say, man wächst mit seinen Aufgaben, you grow with your tasks. So let's hope that the common European Union foreign policy will grow with the challenges ahead, especially the migration pressure from the south in Africa, but also with the interesting market and prosperity possible in Africa. Because of our shared history, Europe has, in my view, a special responsibility to ensure not only prosperity in Africa, but also freedom and the respect for elementary human rights. And I also see the opportunities that a strong alliance and partnership between Africa and the European Union could be a strong political and economic force on the global stage, something neither of the two continents on its own could achieve. The last optimistic point I would like to mention is climate and the Green Deal. To achieve the goals of climate neutrality by 2050, Europe has to change radically its energy policy. Reading the German and European hydrogen, she both launched earlier this year, we noticed ambitious aims, while the way to achieve them are still vague. In my view, this is a field where we can benefit from each other, our mutual African-European companionship. Africa is prone to the production of renewable energy in different sectors, wind, solar, and hydro, which are needed for the production of green hydrogen. Maybe you have heard in this context, I have spent considerable time over the last few months taking and talking about the potential of the Inga 3 project in the Democratic Republic of the Congo. The project has originally been brought to my attention by a meeting with people from the DRC. The cheapest green energy can possibly be generated in the DRC at the Inga Rapids in the Congo River. The amount of energy that can potentially be generated by far exceeds the needs of the region. If the excess could be used for the production of hydrogen and then exported to Europe, the product could be economically viable and bankable. We still need to undertake the necessary feasibility studies and as well as environmental and social risk assessments. But if they are favorable, Inga 3 or even Grand Inga could be a flagship for the European Union, African Union cooperation for green energy. It could be a real game changer. So I have given you a good part of my visions, of why and how the European Union and Germany, as part of it, Africa can work together to ensure that they drive forward their common agenda and ensure the prosperity in Africa or a prosperous future for both continents. There are important cornerstones such as an adequate investment framework, better infrastructure, as well as educated labor force and great integration within Africa, digitization, the future role of the EU and in general in geopolitics and opportunities created by climate policy. Keep me optimistic. And so my last sentence, I hope to have given a stimulating keynote to you, and I'm keen to engage with you on the panel with the audience, and maybe there are also some contradictions and other things we have to discuss. Thank you very much.
Thank you, Your Excellency. Thank you very much for those incredible insights. And I've been jotting them down because there's just so much to get through. So thank you very much. So based on your insights, you mentioned some of the projects that are in process and or at least you're interested in. And I think for many people that have joined us today, we've come across the Inga 3 project, and it's exciting regionally and exciting for the continent. I would just like to remind our audience members to please send your questions through. It's at the bottom of your screen. It says Q&A, so please send through your questions and we'll get to them as the conversation continues. And at this point, I'd like to welcome NJ Ayuk, the Executive Chairman at the Africa Energy Chamber, as well as Renee Awambeng, the Vice President of Afrixim Bank. So, Mr. Nuka, I'm actually going to start with you because we have to talk about Inga 3. It is exciting. You're talking about feasibility studies, and it's really been on the minds of so many people. How do you build, the infrastructure plant, the infrastructure that's needed? So the hydrogen plant. Then you need to think about pipeline into Europe. So the idea is fantastic, but from past experience, anything to do with Inga has, seen costs being exorbitant and really money that has been overspent in terms of what the initial prognosis was to the final investment. How are you looking at past experience and then saying, look, this is going to be a viable project for us and for the EU?
Yeah, it's difficult to explain everything. There's a change. We have a new president, Tshisekedi, in the DRC. We have a new interest by even US and General Electric, for instance. So the danger is that Africa, or the Inga 3, is becoming a battlefield between the G2, the China and US interests. China is saying, I will build, we built the dam, and the debts are by the DRC. US is interested, and Europe is only the visitor from outside. But we have the essential, the crucial interest in the well-being of Africa, what I said in the beginning. So we have to do something, and only the Europeans, German and the European Union has a strategy and will create a market for hydrogen. And if there is the possibility to sell hydrogen in Europe, not via a pipeline, it's possible with a decentral energy supply, with shipping the hydrogen to Europe, or even for others paying maybe more than Europe. That's the idea. And if you can guarantee that hydrogen could be used in Europe, then you can say we can use the big power supply, the power at the dam in the Inga 3, so that we can guarantee that the entire project will be bankable, is financed by the private sector. That's the idea. No one is really interested in new debts. It's only
exactly.
to testify if it is possible to say Africa is an opportunity. The DRC, with bad ranking, is a country who is able to attract an international consortium with China, with US, but under the lead or with heading by the Europeans.
And I'm glad you mentioned the competition, right? So the US, and we know that Spanish have also been involved, but obviously that's part of the EU. So that's it's going to be an interesting play. I mean, look, one man that's here with us today that understands financing mega projects is Renee. So I'm going to get you to jump in here, Renee. And when you see Inga 3 and you see the interest and serious interest coming through from the Germans, it is exciting. But at the same time, look, you've got to make sure that the money's put to work, that it's spent properly, and that you can deliver on this dream. What are your thoughts on this? And is it going to be a big game changer? Is that one of the projects that you're excited about?
Yeah, thank you very much, Eleni. Thank you for giving me the opportunity. First of all, I would like to make a point of correction. I'm actually the global head of client relations and not an executive vice president, just for the records. And yes, we've seen the interest of German companies in Inga 3. I think there's a German company called Wagner who is working to develop the hydrogen plant, and two German companies, Wagner and Lint, will offtake that. So it's quite important to see this developing partnership between German private sector and the African partners. We at the African Export-Import Bank, which is a leading trade finance and trade enabling institution on the continent, have had a long-standing relationship working with both European partners and German financial institutions. We've been working for quite a while with KfW, and I'm happy to say that we have very good collaboration with them. We actually have lines of credit with them. In 2017, we signed a euro 150 million line to support medium-term investments in renewable energy and energy efficient projects, which speaks to one of the key points that Honorable Gunther made around clean energy and climate change. And you'll be pleased to know that line of credit was used to actually finance Tanzania Gauge Railway transaction. Ever since the pandemic broke out in March this year, we have been having extensive discussions through the German Ministry of Finance, BMZ, and the KfW again, to put in place a $300 million facility to support a project which is called the United Nations Economic Council for Africa, Afreximbank initiative. Under this initiative, we're helping African domestic companies to actually produce domestically materials to support the crisis, and this will create jobs and create value for Africans. So we are in very advanced stages of discussions with the German government for this facility to be approved. We are quite aware that the Ministry of Finance has given the support, and this facility will be approved in the next couple of days. So I can say that the collaboration between African banking Pan-African bank like Afreximbank and the German DFIs and German banking institutions has been very successful. And I don't think this collaboration is just at our level. Other DFIs, other commercial banks do enjoy an extensive relationship with the German financial institutions. Our collaboration doesn't always stop there. I would like to say again that working with the African Automobile Manufacturers Association and some German private sector companies like Volkswagen and Bosch, We are now working to build an African automobile strategy. This strategy, we are now preparing an MOU where we're actually going to create regional automotive value chains to actually focus on developing and building automobiles using German technology on the continent. This is a very, very huge initiative which will bring a lot of value and collaboration from these German companies in that we would add value by promoting activities across the automobile chain on the African continent. We will adopt a holistic chain of manufacturing, both vertically and horizontal manufacturing on the continent. We will create joint ventures with these German companies to take advantage of the African Continental Free Trade Agreements, long-term developments. This will also bring in transfer of knowledge, transfer of skills, global operations for some of these German companies on the African continent. And of course, the range of financing opportunities that this will bring in terms of either financing this industry or financing the consumers that will work. So the collaboration with the German private sector, whether it's on the financing side or on the business side, I see it as quite encouraging this far.
Fantastic. Thank you very much, Renee, and apologies for your title. I'm going to take responsibility for that, even though I got it in my script. So I apologize profusely, but I've upgraded the title, which I'm sure, I apologize profusely for that, but I'm sure our audience is going to forgive me. If I could just now go to NJ, and NJ, you're a thought leader in the energy space, you're a mobilizer of deals and ideas. And 2020, we know, has been absolutely tumultuous. Commodity prices have fallen apart. The continent has had an unhealthy reliance on commodities, they say, for many years, but at the same time, it's so important and vital to economic growth. I'm curious about where you think things are going and some of the opportunities that German investors could be considering. And we mentioned, Inga, we talked about hydrogen. We heard Renee, alluding to some of the projects that people get involved in. And through the last few months, we've had time to really reflect on what those opportunities might be. If you could give us some of those ideas for our audience, that would be great.
Thank you so much, Eleni, and it's an honor to join Sebastian, His Excellency, Nuka, Renee, and you. And I think the whole group, you have Sebastian, a businessman, Mr. Nuka, a politician, Renee, a money guy, and I think I'm the only gentleman in the place. We have seen a very, very interesting keynote remark from His Excellency Nuka, which I think is eye-opening. And there you find answers to where African and German businesses. I think I take to Lee's two key remarks here. Climate change, you're going to see a big fundamental shift in energy policy that has to do with climate change and the climate realities. That is not something we have to run in. Everybody who thinks climate change is not real, they need to dig their head in the sand. They're crazy. It is real, and it's something we have to deal with. But now, here's what you go to the next step. We might disagree on how to get there, but you have to look at the opportunities. And this is where the Germans and Africans really make a big difference. Now, His Excellency Nuka presented something which was, I think, was a really great idea of using structural and investment funds to come in. Our key problem in the continent with opportunities has always been capital, not just capital, but patient capital to really take on these projects. You're going to look at whether it is solar, whether it is renewable projects and everything. The Inga Dam is really big, but the biggest issue we have to deal right now is that we have from 1.2 billion people in the continent, 850 million people have no access to energy. So that 850 million people, that creates a big opportunity where if you look at providing small-scale LNG, we believe you need gas to get to a low carbon environment. But if you look at small-scale LNG, Germans are really great at using gas to power themselves. They get rid of coal. That's a great area you could look at. If you look at some of the renewables, whether it's solar, wind, you could really look at rural electrification, which you can still be able to meet some of the climate goals, but at the same time, really target the most vulnerable people in our continent. But at the end, you do what I love to do, make money at the same time, because there is nothing so good like doing good, making money at the same time. You have fun with what you do, so you have to look at those small-scale renewable projects. There's a young German lady on this webinar who I've been very impressed with some of the biogas initiatives that she's been doing in Ethiopia, extending it into Nigeria. This is a just doggone strong German sister that sets out there and do it. Question is that why are we not having other Africans do the same? You know, the question is that why are we not having other African young people take advantage of these technological advances that these young people are. And Mr. Nuke is right, Eleni. We have to create an enabling environment for Renee to spend money and for Mr. Nuke's people to spend money. We just can't say, get those structural funds, those investment funds. We have to cut for the
do you think it's going to be the Continental Free Trade Agreement that will help, you know, create blanket policy across various countries? Is that what you're thinking that is exciting, specifically within the energy space? The energy space has notoriously been kind of more risky business to enter into, and of course has negative perceptions. And you're talking about solar, which is greener. I'm curious to see how we're going to create that enabling environment where people go, you know what, I'm going to take on the risk because it's absolutely worth investing on the continent in no matter what country I'm in.
There's nothing negative about energy. You need light, so the perception has to change. Look at me, I'm smiling. But
yeah, but it costs, right? And can you make your money back versus the investment? So I know what you're saying, but let's talk about, you know, the numbers.
I think everybody has to make their money back, Eleni. It's really important. The Continental Free Trade Act is good. It's nice. It's a step in the right direction. But let's be very, very clear. If I'm talking to a young man in Munich, Baden-Württemberg, or in the Roland in Germany, they see Africa, they see risks. They are scared, they're worried about some of the mismanagement, the corruption and everything. So we have an obligation to make some kind of changes. The way we treat people, how we move women in the workforce, how we drive, we make it so easy, we make it faster for people to start a business and keep a business, deal with governance issues, but also sometimes that environment, yes, the Free Trade Act is a step in the right direction, but each and every country. I'll give you an example. A country like Rwanda, which someone would say, well, you know, it's not the best, blah, 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 but they have paved the way and they have actually, I mean, this guy's got Volkswagen in Rwanda.
Yes, yeah.
Country, not up to 2 million, but then you have to ask yourself, why are you not having Volkswagen in, you know, some of the countries that have 80, 90, 100 million people? I don't want to mention that because I have to fly in a little bit. I don't want to get in trouble. But those countries have to reshape themselves and structure themselves. Rene is up there. If he has to put money, he's going to ask those questions. So I got to make sure it's for Rene to fund all these African businesses.
Okay, Rene, this is where you jump in. You're managing money. You're the one that needs to put money to work, and you need to find those bankable projects. And I get what Inga is saying about, you know, creating that enabling environment. Since the start of the pandemic, have we seen an acceleration in governments wanting to create that enabling environment? Something we've been talking about for some time, we just haven't had a chance to truly implement. Would you say that things are shifting?
Yeah, thank you again, Eleni. The pandemic has been a real challenge for some of our operating economies across the African continent. Most of our countries are reliant on export commodities, where they have to trade internationally to gain liquidity effects to run their countries or fiscal revenues. Because supply chains have been disrupted at this time, countries have to now be innovative to find other ways of survival. This means that they have to take opportunity and create the right enabling environment to attract investment under these difficult circumstances. And what comes to play immediately is the African Continental Free Trade Agreement, where a lot of the African countries are actually bracing up themselves to start working within the framework of the CFTA so that they can take advantage of this in producing domestically, attracting foreign direct investments, and distributing across our continent, because there is a huge opportunity. NJ mentioned that in the discussion around intra-African trade. Before even look at the export market, the continent provides a market for 1.2 billion people and growing. So yes, I think the pandemic has spurred some of the African countries to be more realistic, more open about attracting investment. And as I mentioned, we are seeing some of these investments coming in from Germany. I did give examples around the African Automobile Association initiative, which we put together with the German auto manufacturers. And I mentioned that we're now signing an MOU and putting in place a plan of action. One other example I could give you, which is a reality, is you know that we signed an agreement with Tello DB, which is actually a South African company, to actually identify and manage railways in Africa. Now, Tello has entered into a strategic alliance also with DB, which is the German railway company, to help us with the technical part and the technology and the management of these railways. Traction is also happening on that. There are a number of projects happening in West Africa. I can tell you in Liberia, in Guinea, Conakry, across South Africa. So yes, at this time, given the challenges of the pandemic, it has become a reality for African countries to create the right environment, to put the right governance, to attract investments to come into their own countries.
Would you say that since the start of the pandemic, that you've seen business deals being delayed, companies not wanting to embark on expansion plans, big projects also being put on hold? What has your experience been, and where do the Germans lie in the greater context of that?
Yeah, the uncertainty, particularly with the lockdowns and the disruptions in the supply chains, definitely caused people to rethink how to do their business. So obviously there were delays and some kind of delays in schedule, in implementation and execution of projects that were being conceived. But however, Africans are very versatile. They're very dynamic people. We've adapted to the realities of COVID. We are now working. Everybody is working online. We are using virtual means to communicate, to send around documents. We've opened our ports, we've opened our airports. People are still trying to move goods and services. So I think there is a kind of pickup of activity after June. Some of these projects are back on track across some of the various countries. Discussions are happening with partners. Yes, there are challenges. One of those challenges that remain is let me say probably the FX scarcity or the liquidity challenges that some of our, the fiscal challenges that some of our economies have, which I mentioned is closely related to the drop in commodity prices and the lack of fiscal revenues. So yes, these challenges are also seen as opportunities to be able to try to create domestic manufacturing, domestic production, domestic transformation, instead of relying on imports. So at this time, you are right. Some of the African projects have seen delays, but also African entrepreneurs working with African governments are trying to be innovative as to how they bring these projects back on track and schedule these projects. We, during this period, have continued to support our partner countries. We have also continued to support financial institutions. We've continued to provide support to corporates across the continent. We haven't closed shop. We still remain opportunistic. We still remain positive about the opportunity to do business on the continent.
Okay, so Your Excellency, Mr. Nuka, if you could jump in here, and you know, I remember the announcement of the compact with Africa, and it was interesting because everyone said, okay, Germany is kind of late to the party. You've got the Chinese, the US had already tried to spearhead big projects, but the EU overall with Africa has really strong relationship. It's undeniable. We've got big companies, German companies, that have been on the continent for almost a century. So the relationship has existed for a while. The big criticism that came through is that great ideas, great insights, great intention, but how do we get this to work? So since 2017, what would you say the big, points of interest have been, and how many of those have actually come to fruition, would you say? And where do we stand right now as we work through this crisis? If you could give me some idea.
The compact with Africa was an idea by the finance ministers during our G20 presidency, 2017. And what we did is we spent more money for funds to support investments in Africa, not only for German companies, but for everyone. And the original idea of the compact was to create an environment where the financing, the private and public financing of infrastructure investments is becoming better. It's getting for the better because of this modules in the compact. That was the original idea, and I mentioned it, infrastructure investments are a precondition for more productivity and for the investment at all. So that's, and Germany has raised the awareness of the continent as an investment destination, but of course it's difficult. What NG and Jay and others mentioned, the perception of Africa is it's too dangerous. We cannot invest in a country like the Democratic Republic of the Congo with the kind of presidents and environments of presidents where everyone is fighting each other. And so that's the perception. And the German government...
I guess, just on that, I mean, what's your risk for appetite? I mean, what's your appetite for risk? And what is the risk profile of the countries you're looking into? And what German business is saying to you, you know?
The idea, what I mentioned was the challenge is there. We have to do something, and the time is ticking. So that means the politicians, myself and others, the chancellor is more or less on my side, but the ministries, the staff here in the different ministries in Germany, they have to recognize that waiting or doing nothing is not a way out of the crisis. So, and that means it's a political interest that private companies will go to Africa and invest. What is you can say that the test of the pudding is in the eating. So let us try to invest, not 10 million, but 10 billion in the DRC. And let us see what has to change on the side of the Congolese and the African Union ground and investment institutions. And what have the Germans or the European Union to do in the cases of give them the guarantees. We need not money. Money is there. Everywhere in the world want to invest. But we have to give the guarantees, and we have to believe in our own speeches regarding hydrogen strategies, regarding geopolitics from the European Union, regarding the climate change and all.
Fantastic, thank you for that. I'm just going to go through some of the questions that we have, and then we'll go back to our Q&A. And Mr. Nuka, there are quite a few questions leveled at you, and the one question that came through is that there's a lot of support for new German businesses wanting to enter the continent, but very little for existing German businesses. What are you doing to cultivate the existing value chains of businesses that exist here versus the new companies that want to enter the market?
But what I can say is that we all appreciate the idea of the African Union to establish this African continental free trade area. So that means the production in Africa, investments in Africa, and the production in Africa of having goods and services in Africa is not only to export it to the European Union or to other regions in the world. The idea is to use the internal trade and the market in Africa together with African companies So the COVID-19 is a danger for the global value change. Of course, everyone is looking for their own country or their own market.
Absolutely. All right, thank you for that.
The idea is...
Sorry, you broke up there. Okay, please finish.
Yeah?
Sorry, you broke up there. I thought you had finished. Please complete.
The idea, Melanie, the idea is we have this neighboring continents. It's only the Mediterranean in between. So we have to do something. We are companions, or it's our fate to work together. And then we have to learn from each other. The African side, like Jay said, they have to say what they can do and what they not can do, and the Europeans as well. So we can accept legal migration by 1 or 10 million people. It's my opinion. But we cannot accept in a democratic state, in a member state of the European Union, 100 or 300 million of new inhabitants from Africa. So we have to create jobs in Africa. That's very clear for everyone. And that is a political challenge for everyone, for the politicians and the private sector. And we have to say how we can invest in a way that this creates win-win situations for everyone. Construction workers during the construction phase, more money for the budget of the DRC or the African Union when the power will be solved, and of course hydrogen, green hydrogen for the European Union, and Africa or the DRC or can become a player in the global economy, in the world economy, or in the energy sector of the 21st century.
Okay, that was really insightful, and you're so right. We need to create jobs, and it's vital for the continent and for ensuring a better quality of life in Africa, so that people don't search for another market, right, for that economic prosperity. And Renee, you know, you were talking about making African markets more attractive. What do you think the needs actually are? We need to create more bankable projects. We need more lines of credits, and I get that, because that's the realistic approach on the ground. But Mr. Nuka also mentioned something very vital. You know, 80% of what really makes Africa tick is the informal sector. So these are the realities that we're dealing with, and I wonder how you're assessing the competitiveness of African markets to say, hey, look, we're open for business. We've been talking about it for a while, but this is what you can really achieve on the continent.
Yeah, thanks again, Eddie. The reality is that there is huge amount of capital waiting for projects in Africa, across the continent. There are all sorts of capital, equity, bank debt waiting for projects. But have we created the right kind of projects, the right kind of environment, the right kind of governance to attract these investments and these projects? That is the challenge.
Yeah.
Doing business still presents significant challenges across many countries and markets in our continent. Again, I'll come back to the CFTA. If we have a single African market, it's going to bring down all the economic blocks, the economic trading regions that we have. It's going to simplify and make it easier for people to do business. We have multiple languages, we have multiple jurisdictions, we have multiple legal systems, we have conflicting legislation. Why would I come and put my business in an environment which is that challenging when I have other options across the other continents? You tell me that you've got cheap labor, you've got a big market, you've also got that in China, you've also got that in Asia, you've also got that in Latin America. So we still have work to do as Africans to make our markets competitive. Our own multiple currencies also don't help. The fact that the currencies that we're trading are devaluing against major world currencies doesn't help investors. I'll create the necessary confidence to put their money. Why would I put $10 today and in 1 year my $10 becomes $1? How do you explain those kind of challenges? How do you explain multiple changes of regulation in countries? Somebody has just posted, why has it taken 50 years for Inga to become a live transaction? Those are some of the realities which make doing business in Africa really uncompetitive for investors. So our job as a development financial institution is to try and propose solutions, working with both the private sector and public sector in bridging some of this. So if you take, for example, the payments, we're working on the Pan-African payments platform to be able to help people trading in African currencies to pay in their own currencies. We're working on a trade information portal to help countries or buyers and sellers to find out opportunities available on the continent. We're working on due diligence and compliance repository called MANSA, where people can put basic KYC information about their businesses to enable investors to check them out easily. We are building a network let me just give you an example. Do you know how difficult it is to make a payment from Angola to DRC?
Yes, it's going
These are two neighboring countries. So to make a payment from Luanda to Lubumbashi, the money probably has to go to a Portuguese bank, then it goes to a bank in Belgium before it comes back to Lubumbashi. What we are doing at the bank, we are building a network where we are asking all the banks together to talk with us. We've given lines we have a program to give lines to over 500 banks so that African banks can start talking to one another. So that with one swift message, I can send money from Lubumbashi to Luanda instead of sending it with all the inefficiencies and the cost of sending it back to Europe and back to Africa. So this is work in progress, Eleni. And we need to be very conscious that we need to collectively work. There's effort that needs to be done from both the public sector, from the private sector, to make our economies, to make our businesses competitive, to attract that investment. Otherwise, the investment will go to China. Otherwise, the investment will go to Europe. Otherwise, the investment will go to North America. It will go to South America.
And we're selling our own currencies and buying the dollar or the euro so we can make, transactions on the continent. And thank you for that. NJ, I've got many questions for you and I hope you're ready. Okay, so there's a few from the audience for you, and it's from Joshua Akena in Uganda, and saying that he works at Marsh as an insurance risk specialist, specifically in energy. And he's saying he's seeing a very big challenge in regards to projects that have been put on hold due to COVID-19. So how will we attract more investors, in particular funders, for projects to come in Africa, specifically within the energy space? And I guess, NJ, this really speaks to the fact that you had oil prices falling off a cliff, energy projects being put on hold, because these are big ticket items. So whether you're looking at the power sector or you're looking at oil and gas, these are big projects and they require companies to take on big risk. And then you've got the insurance at play. How are you seeing this? And I know you're working on a book as well that's going to be delving into these issues.
And thanks for that question. I think you're going to see a lot of projects have been delayed, but we're fortunate about one thing in Africa.
Yeah.
They have not been canceled. They've been postponed, delayed, but they're not canceled. That means some of these projects, as Renee would say, maybe they are still bankable. Hopefully, at the time you start looking at it, these projects still make sense. But then it comes to a point where we have to look at this to say, how do we keep this project working? We have to, it's not rocket science. You have to look at what other economies have done during this crisis. You look at your people in the eye and you tell them, well, whether it's Europe, whether United States, whether in Asia, they've figured out how to bring home-based stimulus to stimulate the economy. African states and some of our countries are more focused on saying, how do we get more aid? Aid is not going to get these projects back. So you need to find ways to stimulate it. Maybe I'll tell you an example. If you look at Uganda, they had to get the deal done because they had to cut the taxes. Ghana found oil in 2007. Uganda discovered oil in 2007. That's Jubilee and what was discovered in Uganda. Guess what? Uganda was producing in 2011. In 2020, Uganda is still debating some windfall tax and all of that stuff. Look at how much jobs they have lost in 10 years because of political wrangling. Look at how much investment they have lost, because when you get a big project and it's there, I mean, Total has gone bankrupt because of all the delays. So we need to cut the red tape, stimulate economies so that investors still say, I have a partner that I'm working with. And yes, Mr. Nuke is right without the German investment, but let's not act as if Germans are saints. you know, I think the way this relationship is, when you look at it, it's like Germans want to date, Africans want to get married. So I think we need to get this marriage going and forget about dating. So that's how we get there. And Renee is right when he talk about the bottlenecks. But before you go on this Free Trade Act and everything and people losing money, how about we just get visas? It's easier for a German to come into many African countries than someone from Ghana or Cameroon or Nigeria or Mozambique to travel to a neighboring country. You want to trade? You can't talk about having some paper and trading with somebody that you can't travel to. You can't move from Angola to Mumbashi to go check your goods because they won't give you a visa. So we need to look at that. But I still think that the Germans do have great ideas, but they need to commit. They need to put money where their mouth is, and they need to do that because at the end of the day, China is not going to support us with the climate goals you want to meet by 2050. China is investing more in coal, oil, and all those things that you're against. So if you're going to take a back seat and say, I'm going to let China drive this, don't worry, that red dragon is going to drive you off the cliff. You need to get your Blackbirds and your Zems and put it out there, put your stance in Africa, and really get the job done by financing projects and forget about aid. Africans don't need aid. You put aid out there, the governments are going to spend it all. Invest in African companies with German counterparts and drive business going. You will see great returns from 1.2 billion people.
So NJ, I'm all for marriage proposals on my panels. This is fantastic. So we'll get the answer from Mr. Nuka in just a while, but I've got a few more questions for you. So in this marriage, what do we bring to the table, right? And how stable are we in this alliance that you speak of? And I was looking at the oil and gas sector on the continent. We're really reliant on fossil fuels, as I mentioned. I mean, it's an exciting space. It still can really boost economic growth. But the Germans bring something really interesting in the renewable front on technology and the fact that they're able to bring efficiencies and create kind of a greener future for us. So I want you, NJ, to give me a sense of, within the space that you operate, just how much interest have there been from German counterparts and businesses, and how you see this relationship playing out, and is it on the green and renewable side, would you say?
The Germans play a good role, but Germans want to supply, they don't want to invest. Okay. If I talk to 10 German companies, all they want to tell me is that I have this equipment, I have this equipment, I have this skill, and I want to put out there. And Africans are saying, capital is my problem. That's what I'm saying. They want to date, they don't want to get married. They want to get these hands off the high relationship, like, you just, let's social distance. Africans don't want social distancing. They want to get close. And that's even before COVID. What you're looking at, this stuff right now is Germany. Look at that country. Germany produces more power than half of the continent. They have been able to pipeline gas out of Russia, bring it to Germany, and build one of the world's best petrochemical facilities. Able to take gas and transform their economies, urea, ammonia, NPK, fertilizer plants. Where do you have it the best? We have it in Germany. What does that do? It diversifies the economy. It kills what we talk about African economies dealing with the resource costs. So what do you know where you go from there? You power agriculture. You really transform lives. You feed your people. And you even stop some of the instabilities and the wars because of these petrochemicals, using gas, fertilizer, and everything. You're really driving up economies. When people are eating, when people are not hungry, a hungry man is angry. Do you look at those guys doing these Tuareg rebels, and they're all skinny? Look at go up there in South and they're all skinny. Do you think Mr. Nuke or Renee, they're big, heavy guys. Do you think these guys will fight a war? People with fat bellies don't fight wars. They chill. So if we get people moving, we get people walking, they're not going to fight wars. You have a more stable environment. So there is much. I think what is missing in this stuff is the Germans have to really start thinking at financing, getting real commitment, because here's a big side for Germans. 1.2 billion people in Africa. if you can take LNG and gas and petrochemicals and move it around infrastructure in the continent, that is so much money, man. You guys gonna be smiling to the bank. But also look at what comes into it. At the end of the day, you have an EU market, 300 million people. That's not a lot of people. That's not a lot of people. So you're going to be the manufacturing hub of Europe with no market to send your stuff because you're taking a laid back approach and you're just trying to lean back like Fat Boy Joe would say. So I'm just going to lean back like Fat Joe and let the Germans keep going back and not really trying to put money in what they do because China has 1.2 billion. You're going to come over your head and they're going to take it all. I'm just going to lean back. So I think
that was the most impassioned proposal I've ever heard. And to be honest with you, NJ, you say it so succinctly when you say, you know, what is your true commitment? Are you just trying to sell us equipment, or do you really want to invest and truly create change on the ground? Because there's a distinction between just trying to sell us products and versus, you know, really investing on the ground. So I wonder.
Climate change will not happen with the German model. 2050, the German model of thinking they're going to sell equipment into Africa and think that equipment would run itself and you would have low carbon by 2050. That's not going to happen. You have to invest in climate change, but not aid.
Mr. Nooker.
Yeah.
John, listen, do you accept the proposal?
Yeah, first of all, I have spoken about the partnership between Europe and Africa. So
yes.
I have to put a little bit down the expectations only regarding Germany and German companies. So there's a lot of hesitation inside politics and inside the business sector. So, but of course, if we can realize where are the opportunities, the challenges, and then German and African countries, or better, Euro-Africa, can work together, walk, whatever. And the idea is really to invest in a sector where we all are convinced that will be the right way for the next 50, 100 years. So that Africa should play a role in the energy economy of this 21st century. That means power to X is a very interesting issue. Using the existing LNG infrastructure, building new ports for this kind of shipping of hydrogen, artificial fuel, whatever. So all those things could be done together, not that the Germans will invest in Africa. Even what I mentioned, hydrogen production or generation in Africa will means we have to work together in developing the technologies and the knowledge. So it's not that something could be done only by those coming out from outside into Africa for weeks and then they will vanish. We have to, we want to learn together what's possible. And what Anjay said, I'm very convinced if there is a market of maybe 2 billion Africans and 700-800 inhabitants in the European Union, that means it's the biggest market in the world. And if you want to become a global player, it's not only possible with weapons and in the military sector, you can also play a role in the world if you are the prosperous region compared to others. So, and that would be attractive for Europe and Africa. My analysis is Europe alone and Africa alone is not a global player in the next 50 years when the big guys will do their own business and fighting for their own interests. And the interests of Africans and Europeans are close to each other.
Eleni, I want to come in here because I think the Europeans and the Germans are more at risk. they need to take it a little bit more seriously and boldly. If you look at the migration issue and you look at the Sahel problems, Africans are not going to migrate to China easily overnight because of geographical reasons. They're not going to migrate in their turns to the US. They will migrate to Europe, and Europe will continue to see these pressures that they have. Europe needs to have a bold and a plan how to deal with Africa. For those of countries where we are seeing civil strife and war, we don't manufacture any military gear or arms on our countries. They are manufactured countries. And they appear here, they should stop supporting or selling those things here. They can help with governance. They sit at all the bodies where governance issues are discussed and where political leadership is discussed. They can help us with that governance, even though at the end of the day, the power lies with the electorate. They can help our people. They have access to funding. They can help us with some of the major projects on the continent that will help to diversify and open up Africa. And I feel projects that if they are done in a collective and harmonized and organized manner will break up the continent. One of them is building the infrastructure around the continent. Do you know what 100,000 kilometers of railway will do? Linking every African country and helping to move goods and services. The Germans have got excess capacity in some of these industries. They should transfer that knowledge. They should transfer the technology. They should transfer the skills back to Africa. The Europeans have benefited from the African riches. It's a time that they help us to put us on track to help to solve some of their future problems. That is a view which I'm very strong about. Thank you.
Thank you very much. I'm going to go to questions now. We've got about 10 minutes left. And I'm, Mr. Nuka, this is a question from the Wall Street Journal from Dan Keeler. The question is, how do the above topics mesh with Germany's efforts to tackle the human migration crisis from Africa into Europe, which you've spoken about and you touched on quite a bit, but I know it's a passion of yours. And I'm wondering just how much, are you really thinking about this in terms of foreign policy when it comes to the continent? I mean, it's a really interesting topic while we're considering economic development on the continent.
I have tried to mention something about this response to the migration issue or the pressure from the South regarding labor migration. And it's, of course, young people migrate in search of better opportunities or of perspectives for their own life and their families. That's very clear. But and what we have to understand in Europe is they cannot, we cannot bring them back in their villages. They have collected money for the smugglers, but they can send remittances back to their villages, not only from London, from Berlin or Paris. They can also send from those industries where they will find well-paid jobs, where well-trained, educated people can work and get jobs, which is much better than have no jobs or become a taxi driver in Europe. So that's the issue, and we all together have to analyze what is possible. I mentioned the very small jobs with the diaspora and the remittances in the micro businesses. But on the other hand, maybe the biggest one is the idea is to the hydrogen production with green energy from the Congo River. So that, and in between it's a lot, and we have to do and to try everything together with Africans. And the journey is, it's a learning journey. We, on both sides, and maybe creating knowledge between with Africans and Germans or Europeans. And of course, we are different. We are not maybe every time at the same eye level or what the politicians are saying. There are differences, and that means there's a potential for creating something new.
Absolutely. Thank you, Mr. Nuka. NJ, there's a few questions that have come up on corruption. One specifically says, how does one marry corruption? Africa is riddled with corruption. So NJ, tell me your view on that, and how do we rid the continent of this evil, at least the perception of it, because it's still very much alive?
Corruption is alive and it's everywhere, and it's discouraged through the content, but it got to be tackled from the top. It is always it's always bad when people, African, all they say is corruption and corruption and corruption and corruption. That's wrong. But I think the more we get transparent rules on how we operate, the better it is for good governance and really moving away from the bad acts. The question is this: Rene talked about doing transferring funds and getting a single payment platform. You go to the bank, you try to transfer money right now with FX, they ask you for a bribe, they ask you for a cut. So you have technology. So you can't just, you can't just wait and think that we are going to legislate morality to do that. You Christian, Jesus tried that, you all killed him. So how do you think you're going to change people the way that would happen? I think we have a chance where we got technology right now. We can use technology to cut out access some of these ills. It's not going to end it, but technology could really drive a lot of things on this mismanagement. I mean, you talk about Germany. Some of the things which Germany has done in the past is they have really tried to freeze assets and really deal with this issue and engage a more better governance system that has worked. I'll tell you one thing, Eleni. They have trained more Africans, when you compare to Europe, more African engineers, more African technicians and business people have had degrees and education in Germany and everything than any European country. And they all studied there for free. And so you could see that kind of transfer, that kind of technology movement is there, but you have to do more to get more people. But corruption is there. If I was running an organization, I hit the guys in the top. I hit them so bad their head would spin. The guys down, they wouldn't touch a dime. In my company, you take a dime, I hit you so bad you out. And I think it takes leadership from the top to address this issue, because whenever is there the perception of it, people back out from doing business. Get tough with the guys at the top. Get tough with your buddies around you. Trust me, it will go away.
Thank you for that. Renee, I want you to jump in here. Here's a question from Ian Petherbridge. The question is on whether Afrixim would be granting lines of credit to DFIs and commercial banks to on-lend to collaborative initiatives on the continent with respect to green energy projects. I know, climate change and green energy projects are definitely on your radar, but how can one truly capitalize on that?
Renee, you're on mute.
Renee.
Thank you for that question. The renewable energy and green energy sector is a very attractive one. I do invite all the operators on that sector to be bullish. There is long-term, cheap financing available from almost every pocket, DFIs, sovereigns across the globe for support to this, from project preparation to technical capacity to helping you source, whether it's wind, whether it's solar. There is so much opportunity in renewables. As I mentioned at the beginning of this discussion, we actually have money from KfW to support renewable energy projects on the continent. The reality is we don't see enough of them. Everybody is still coming back with fossil fuels. We don't see enough of them. Even small-scale renewable energy projects are welcome. So please pick up your thinking hat.
Keep financing available. That's all I have. So you're invited, audience. You're invited. I mean, okay, look, here's a question from Ambassador of Zambia to Germany, His Excellency Anthony Mokwita. The question is for Mr. Nuka, and would Germany be interested in rolling out extensive agriculture projects in Zambia to feed Europe? Zambia has vast arable land, but it is thin on long-term capital, especially after COVID-19. Thank you very much, according to Mr. Mokwita. So,
Zambia is a good example because of they started a German company here based in Berlin called MSC Agri, and invested 100 million euro in a, what we are calling it, commercial farming. And it's really very effective. And we can do a lot in the agricultural sector with new technologies, but with the old concept, the irrigation must be available, the cattle, the plants. So with there's a big potential in the agricultural sector, and we have a company which is really interested now. They have a little bit changed to superfoods to earn more money. So and the first 5 years were more investing money in Africa, and now they have to earn a little bit. So that what a businessman here said, it's of course it's business, and everyone has made to make and the benefits are there for everyone. I think agriculture is very good, but what I mentioned in the speech was, in the end, and that was what the Chinese did in their G20 presidency 2016, the study was industrializing Africa and LDCs, least developed countries. Industrialization is the issue, what also happens from Hong Kong and Shenzhen and the mainland and China. So without industrialization and production of goods in Africa, only with the agricultural sector, we cannot feed this 1 or 2 billion people in the near future. So that means what I said, at all levels, in all sectors, we have to invest, we have to create the right environment. And maybe if there is too much hesitation, we have to build trust. And my idea was walk together, go the way together, go back together, so that the trust is becoming more and more with successful projects, or with the way you have gone, or you have gone in the past. So that's the idea, and the history of Africa and Europe is much closer than Africa and China and Africa and the US. So that is what I advertising for, that the Europeans and the Africans will recognize this, and the right thinking is the precondition for the right things we have to do.
Thank you, Your Excellency. I've got one question for everyone, and then we're going to wrap up. But NJ, look, for the past few years, the kind of conversation is like China has been cannibalizing so many interesting projects. They tread where many countries fear to go. They have risk appetite. Then the US comes in going, we want a piece of the pie. And it's always like this conversation of someone wants a piece of the African growth story and the pie. And I wonder if we need to change that narrative for ourselves, and how you see it in a post-COVID world, and what are the most exciting sectors for you as we wrap up. To the audience who's listening from Germany and all over the continent, is how do we need to view our future for ourselves?
I think we need to change that narrative going forward. We need to be ready and then invite others to come in. The most important thing is that, and that's what we do at the Chamber, we need to create a new generation of young African entrepreneurs, mid-age, who are going to be doing everything. You can't wait for others to come from outside, from Europe, Asia, or China to do it for you. We can do for ourselves what we expect others to do for us. But then when we lay that foundation and create that environment, it is easy for them to come in with maybe higher technical skills, more qualifications, or financing, but then you set the rules of the game. Because right now, what we have in the post-COVID environment is still maybe people outside and saying, I'll do this, but you have to do it. But when you're ready, then you start choosing. So for me, it's kind of like, if we get our act together and we start getting more entrepreneurs working on doing these projects, when someone comes from Germany, we will talk as equal partners, we will negotiate better, we would have a better deal. And I think that's what Germans also want. They want to have a better deal so that the Africans can benefit, but we have to drive it and bring them in to fit in what we want. So thank you, Eleni.
Thank you very much. Renee, last word. Are we ready?
Yeah, I mean, as Africans, we have to take our destiny in our own hands.
Yeah.
We cannot wait for people to shape our destiny. So I do think and I do agree that we are ready. We have a strong market. We are getting ourselves together. Things are improving. 10, 20 years ago, it wasn't the same. 10 years ago, it wasn't the same. There's significant room for improvement. We're on that path, whether it's governance, whether it's corruption, whether it's enabling environment. Things are getting better on the continent. We are making it more competitive. We implore, we invite the young men and women across the continent to think how they can do something for themselves, how they can create value, how they can create jobs. We shouldn't rely on other parties to come and do it for yourself. You can do a renewable project to light up your own community, to light up your village, and it can grow to become a global business. So on that note, I think, yes, we are optimistic about it.
Thank you, Renee. And Mr. Nuka, last word to you, sir.
Yeah, I agree, but I would say we are on the right street. We are moving in the right direction, but not fast enough. It's too slow. And that is my my hesitation. I would not say for the German or for the European side we are ready. We have to be aware of the huge challenge, and then we maybe will recognize also the opportunities. And the best way is not to try everything, but to invest in the future. That means green deals or green energy, or using digitization for upscaling, and look for businesses not only for the people who are rich and can buy Mercedes or Porsche from Germany. Look for the very poor people. They will sell or they will buy an application for the laptop or the tablet for 5 or 10 cents. And which kind of business models are there? I have introduced in Cameroon and with villages and the kings and the chiefs there, the idea of community currencies. So there's a lot of things are possible for increasing liquidity and empowerment for women and for the people, the villagers themselves. So we have a lot of things what we can do, but we have to be aware of the opportunities, but not too much expectations that the change will come over the night.
I know, and that's kind of a realistic approach. Don't have too many expectations, but you know what? It's time for us to be agile and to look at the future and finally accelerate the things that we keep talking about. So, Your Excellency, you've been fantastic in your insights, invaluable. I would love to get Sebastian into the conversation very quickly. I know you have a couple of thoughts before we wrap up. Sebastian.
Thank you, Eleni, and I think in the true spirit of companionship, I would just like to close this webinar by stating that everybody should know I like geography. The distance between Africa and Europe is 8 miles, the shortest distance. So please bear that in mind when you think of His Excellency Noke's spirit of companionship. I would like to thank you first and foremost, Eleni, for managing this webinar so wonderfully with such wonderful spirit. His Excellency Nuke, thank you for taking a lot of time, and thank you to your staff for overcoming the technical challenges yesterday. Renee, it's always a great pleasure to hear your financial insights. You know, I look up to you as a big brother. And last but not least, NJ, our energy preacher. Thank you, and thank you to the African Energy Chamber for supporting the Germany Africa Business Forum's initiatives, as well as our AOP webinars for making the technical environment very conducive, I would say. So please follow all of us, CNN, GABF, Africa Energy Chamber, Afrexim Bank, and the BMZ, the German ministry, on social media, and do not hesitate to jump in on our future webinars, and hopefully in 2021. Once this virus has been overcome, there'll be live events. So thank you all, and do reach out for anything that we can do for you. Goodbye.
Thank you.
Thank you very much, Sebastian. Thank you, team. This will be on YouTube later tonight. and you can catch it on the Africa Will Empower YouTube page. So please go back and watch it if you joined us late, or share with your friends. And one thing is certain, I definitely feel the excitement on the ground from many executives saying it's time for change. It's time for a new growth story out of Africa. So I'm hoping that you, Mr. Nuke, through your efforts in Germany, will be able to be part of that. And then everyone else here that is so passionate, and the executives that have joined us, watching us today, I hope you're part of that story too. And I look forward to the future. And I'll be asking the tough questions if you do not deliver. That I promise you. So I wish you all the best. Thank you.
Thank you.
Thank you.
Thank you.
Auf Wiedersehen.